The UK construction sector stands at a turning point. While government policy signals appear supportive of growth, economic uncertainty, financing costs, and supply chain pressures remain challenges. However, with resilience and strategic adaptation, opportunities for growth remain within reach. In this update, I'll cover the overall market outlook, Mike will discuss construction output, materials and contractor capacity, and Anjani will address the labour market and cost pressures. Although a 2024 recession was avoided, the UK's economic growth outlook remains subdued. The Bank of England cut its GDP growth forecast to 0.75%, citing high inflation, the energy crisis, and weak consumer and business confidence. Consumer price inflation rose to 3% in January, its highest level in 10 months. US trade tariffs could further disrupt supply chains, indirectly pushing UK prices higher, but the impact on the UK economy remains unclear. Nevertheless, interest rates dropped from 4.75% to 4.5%, signalling efforts to support economic momentum. Economic consensus is that the Bank of England will continue to reduce interest rates through the remainder of 2025. However, this may be tempered by further increases in the headline rate of inflation.
UK construction output remained robust at the end of 2024, rising by 0.5% in Q4. However, the UK construction PMI fell into negative territory in January, with a reading of 48.1. This was a 10-month low, suggesting the sector has already entered a period of contraction. The slowdown is being driven by economic uncertainty, weaker business confidence, and challenges with new regulations. One key issue is delays in gateway checks for high-rise residential under the Building Safety Act, which are creating bottlenecks and pushing back start dates for new developments. Looking ahead, the longer-term outlook remains positive, with infrastructure investments a key part of the government's strategy. But in the near term, contractor capacity is tightening. Large firms remain tied up with existing projects, while public sector investment risks pulling resource away from private developments. For clients looking to secure contractor interest, the focus must be on the streamlining projects, reducing complexity and risk. Meanwhile, on a global stage, although planned US tariffs on steel and aluminium imports pose little direct risk to UK growth, their inflationary impact remains uncertain. A shift in trade flows could reduce exports to the US, potentially leading to excess supply in the UK market. With ongoing trade uncertainty, businesses may choose to delay investment decisions, waiting for a clearer picture before committing to new projects.
Despite improvements to the employment figures at the end of 2024, the construction workforce has shrunk by 12% since 2019, with 281,000 fewer workers. Construction vacancies jumped 14.3% in the 3 months to January 2025. This is likely due to delayed hiring and cautious recruitment amid economic uncertainty, which is leaving advertised roles unfilled for longer than usual. Earnings rose 6.6% in December 2024, well above the 3.1% long-term average, driven by skilled labour shortages. We're likely to see a continuation of above-trend earnings growth in 2025, fueled by public sector investment, renewed activity in the housing market, and regulatory pressures. Meanwhile, rising national insurance contributions for employers will impact labour costs as contractors pass on these increases.
To summarise this quarter's key takeaways, market uncertainty persists as labour shortages and contractor capacity constraints remain challenges. Economic and political factors are dampening confidence, with a weaker GDP outlook, ongoing inflation pressures and policy shifts slowing investment decisions. However, further anticipated reductions in interest rates may present an opportunity, helping to stimulate investment, improve project viability and revive stalled developments. We recommend working closely with your G&T advisor to model scenarios, strategically time your projects and implement proactive strategies to navigate and mitigate current market pressures effectively.